What's up, guys? I'm bored, so I'm coming here a little bit early. See what you guys are doing? There was so much wind last night. All of my patio furniture got blown over and stuff. I posted the picture in the Bid and Ask Nation. And then I was looking at my roof. Maybe there's something wrong with my roof, so I have my friend who's a roofer might come over today. There was like 60 miles per hour wind or something. I don't know what's going on here. Hey guys, good morning. I'm not going to start teaching until 10 o'clock just because that wouldn't be very nice to do. But hopefully this answers all of your guys' questions. My goal, this grew a lot quicker than I thought it was going to grow. So I keep getting the same questions over and over, and I'm just getting tired of answering them. So hopefully this clears everything up. Betting on Zero. Susie, did I tell you to watch that? Because that is a phenomenal documentary. I love Bill Ackman. When he pulled off that, I think he was selling puts back in March of last year, but when he pulled that off and turned like 150 million into 200 billion, everybody got mad at him. I was like, that's pretty awesome. My morning routine, I wake up, I brush my teeth, I go downstairs. Actually, I usually take a shower before I go downstairs. And then I start talking to you guys. Previous video, yeah. Betting on Zero is a great documentary. I think it's still on Netflix in the United States. If it's not, you can find it anywhere. It's about the, what's the name of that company? Herbalife, and Bill Ackman's big short on Herbalife. I guess he's still kind of wrong, I think, but I don't know. Either way, cool documentary. I do have a fascinating life, long shot. I do have a rather reserved lifestyle. When do you lift things up and put them down? Typically afternoon, like 1 o'clock, 2 o'clock, something like that. That's when I lift things up and put them down. Herbalife is a pyramid scheme. I mean, that's what the bet was. That's what basically the big short on it was by Ackman, is that they were a Ponzi scheme or pyramid scheme. And I mean, of course that documentary is pretty one-sided, but the way it looked, yeah, I mean, but I don't know, like those kind of companies like Advocare and that, I mean, even going back to Amgen back in the day. No, not Amgen, Amway. They were that Ackman versus Icon in a box. Who wins? Definitely Ackman. But that's not really a fair comparison. Like 5% of companies are pyramid schemes. Yeah, probably. Looking for, never read a chart before, so always a little lost. Yeah, that's good. I'd rather you have no experience than any experience, just because I look at it like my golf swing. I played baseball for a lot of years, and I also played hockey. And I have so many bad habits in my golf swing that I have to eliminate. So you don't have any bad habits, which is great. So that's good. More exclusive streams. Yeah, sure, I'll do them. I don't mind. Just let me know what you want. Oh, Colin, you're from Akron? Nice. All right, let's get started. So, hold on, let me go to the other screen. All right, so I'm going to leave it like this just because it's easier for me to control. How long have I been trading? I've been trading since I was 14 years old, and I'm now 32. So, is that 18 years? 18 years. Sean, I only day traded, like literally day traded on a 15-minute chart for maybe 6 months in my life, and that was right after I graduated college. And you can make a lot of money doing it, but I don't like it. So, all right, first thing that I want to address is the chart setup. Guys, there's a reason that so these charts that I have right here, I buy these charts. I think I pay $2,000 a year for these charts. This is from a company called Phil's Gang. They make great charts, but they're expensive. So I think that you guys do not go and try to use this. So this is my 15-minute chart. This is through Charles Schwab's Street Smart Edge. I use them for a 15-minute chart because the setup is so easy. I go over here. I literally have two things. Let me show you what I have. I'm going to pull up my yellow marker here. Okay, I have a volume indicator. That is this. Let me see if I can blow this up. I don't know why this thing's spinning out of control. Okay, let me put up a better stock with some actual volume. Put up Apple. Okay, so this is my 15-minute chart. This is for day trading. If you want to day trade, you need a 15-minute chart. And if you want that, it's no problem. You can go ahead and use any platform is easy, because literally all you have is a volume indicator right here. That's this. You can have or not have Bollinger Bands, which are these white lines. You don't need them. It doesn't make a difference. And then you have your stochastic oscillator, which is set to 10, 3, and 3, and all it is your percent K. That's this number right here. Percent K, set it to 10. That's it. So this is so easy to set up. Do it through any platform. When it comes to your daily and weekly chart, and this is the majority of what I use, you can get any chart to look like mine. You don't need to go out and spend $2,000 a year. But I recommend that you all use, go and use TradingView. And there is a patron who, I think he's in here right now, Simple Living Cash. He has gone through and he just said morning. Simple Living right here. He went out and he made a PowerPoint to exactly replicate my charts on TradingView. That is what you guys should use. They're free. They're excellent. They're exactly the same as mine. The reason that I don't want to use them is because it's not that I don't want to use them. I like the fact that when I teach you guys and I say that your red line is crossing over your yellow or something, or going into the sweet spot, I get a color change indicator. So as soon as my red line crosses into the sweet spot, going positive, I get green candlesticks. And that's easier for me to show you guys than zooming in big time on this candlestick and zooming in big time on this stochastic and saying, guys, do you see it crossing? Do you see it crossing a little bit? It's just easier for me this way. So my goal is to eventually come out with charts that are better than these ones that I'm using. They are super expensive to make. So we need more people in the bid and ask nation for me to justify the cost. But if we do get that big, and I think we will at this rate, you guys will have awesome charts. They will be a little bit of an upcharge, not a crazy. I'm not going to charge $2,000 a year for them, but I'm going to have to charge something just because they're going to be damn expensive. So that's that. But trust me, guys, people that are already in the bid and ask nation, you have seen how much money you are making by following my methods and me kind of hand holding you. People that are not in there, talk to people that are in the bid and ask nation and you'll see. But that's what I'm going to say on chart setup. So if you want to replicate my charts, go create a TradingView account. It is free. Go in the Patreon announcements and replicate, use the PowerPoint that Simple Living set up, and you'll be good. That's it. People that ask me about Fidelity for daily chart and long-term chart, Fidelity, Thinkorswim. I've had somebody ask me about Ally, Schwab. The hell with them. They suck. Use them for a 15-minute chart. Make your life easier and stop trying to do things. I have been trying for weeks, and this is my setup for what is this? This is a daily chart on Schwab. I've been trying for multiple years to get this thing to look right, and it still doesn't look right. So I said, screw it. I'm not going to use it. And I use these and I just pay for them. So that is that. And now I'm going to go on to the PowerPoint. So those of you that are new, you're going to enjoy the beginning of this. Those of you that are not new, this may be a little bit redundant, but I want to start from the basics. And for those of you that have been around for a couple months, you saw yesterday, the day before, that I missed that tweezer pattern on one of those stocks that Ben brought us. So you can always get better and review things. So I'm going to start at the basics. So when I talk about volume is over here on my daily chart, and that's just all it is just telling me the volume of the day. So what does volume do? Volume drives stock. I always say that when we want a big engulfing candlestick, we need volume to come into the stock to drive that stock forward so we get that big green engulfing candlestick. Volume is the amount of energy that is going to give you good buy indicators. And there's a lot of people that ask me about stocks with low average volume. So how many shares traded per day? Volume is the number of shares traded per day. So for Apple example, I think that they have about 65 million trades per day. It might even be higher than that. When you guys bring me stuff like penny stocks or smaller companies, this and that, that's fine to trade. But I like trading companies that have a minimum, absolute minimum of 500,000 shares traded per day. Personally, I like to get into the millions. The only reason is, let's say that I go in and there was a company that I owned 1% of in the past, and I went in and I bought 1% of shares of the company. The average volume on that company was like, at the time, like 300,000 shares traded per day. So I moved that stock that day. Somebody can do that. When I sold, same thing happened. You saw the stock price drop on you because the average shares is so low. I was taking up so many of the shares that were coming out of it that I was swinging prices. That's why people do well in penny stocks. Because if you get a big influx of volume from one buyer or one seller, boom, the stock just goes on you. I do not like that. So that is what volume is. Make sure you're using I would recommend, guys, 1 million shares average or less or more per day. So your stochastic oscillator. So this is the number. When I'm always talking about your trend line, this is trend. So we have 3 different trends that we look at on the 3 different charts. I don't know anything about the math about this. I don't know anything about math, period, really. Where can I get downloaded this PDF? Carlos, do you want this entire PowerPoint? Is that what you're asking for? Let me know. So I say %K, which is my red line on my charts, and my %D, which is my yellow line. %K is when I talk about the trend moving into the sweet spot, that is my overall trend. So when I say we're getting into the sweet spot, it is my %K, which is set at 10%, that is coming into the sweet spot. So let me go over to a chart and just show you guys what I mean. This is the most important thing about trading. So this down here is my stochastic oscillator. Right here. On my long-term chart. This is by the week. So this is just a little bit slower. So I have the period set at a week so that it moves a little bit slower on us. This one over here, because this is my daily chart, just a little more detail. It has volume in it. It has moving averages in it. It has resistance lines and support lines. This is my trend of the day to day. So it moves a little bit quicker. If this is something that you're interested in, doing more of swing trades, which is 1 to 5 days, in and out of a stock, this is where you're going to go. And this stochastic helps you with that. They're virtually the same thing. They're just in different time periods. So obviously this one moves a lot slower. Now, when we get into the 15-minute chart, this moves by the 15-minute period. It's not right or wrong. If you want to use a 1-minute chart, if you want to use a 10-minute chart, it's up to you. I've been doing this for a very long time, and I found that 15 minutes makes me the most money if I do day trades. So this stochastic oscillator is the exact same thing as those other charts. It's my %K set at 10. and it's just the movement of the trend in that 15-minute period window. So all of these are exactly the same. They're just how quickly they move. Is there a difference between fast and slow? Yes, there's a difference between fast and slow, and there's a difference between smooth, fast, and slow. Those are the three. I use slow. What was their question? K is red. So K is red. K is red on mine. You can make it any color you want, but Cash has made it nice so that I want everybody to use the same colors as me. So let's try to do that when you guys set it up on your trading view. So K is red, D is yellow. D's nuts. All right. So simply put, all it is your trend line. And what I'm looking for is to be between 32 and 80%. That is your sweet spot. And when I say sweet spot, it is giving you the probability to make the most money. So I'm going to go back to this chart, and I'm going to make my cookie jar analogy again. So this right here, this is 80%, this is 32%, these red lines. This box that I'm drawing, this is the sweet spot. So you have a lot of cookies in your cookie jar, okay? Actually, let's just draw it over here because we're coming up through that area. So we're coming up through there. Here's your cookies in the cookie jar. You have basically, you are coming through the sweet spot with this red line right now. You are going to be able to eat cookies all the way to the top and make all that money. So as this trend line is moving up, you're going to get you're going to get green engulfing candlesticks moving up like this, and you're just going to keep making money. Now, when you get to the top, when you get up here, that's when I say your stock price is overbought. So when your red line gets up towards 80%, you're getting into that overbought range. Overbought just means that there are a lot of people that are going to start taking their profits because the price point is getting a little bit too high relative to what's on the charts in the past. So I like getting into a stock down here around 32% because I want to make money the entire way up. When you get into this 80% range, I'm not saying that you can't make money. It's just you are not giving yourself the highest probability to make money. And that's what chart reading is all about. We want to give ourselves the highest probability to make money. That's why I go back and I always say buy high, sell higher, because I am giving myself the highest probability of making that money. So again, here's that sweet spot. All right, the trend. Most important thing to learn about trend. The trend is your friend. Always trust your trend. The trend can go reversed on you, but more times than not, if you trust your trend, you are going to do well. Let's go here, and I want to try to find a stock that did some kind of what I call a snapback. Kellogg was one. Let me go to Kellogg. So this is Kellogg from a few days ago. Man, hold on a second. This thing, okay. All right. Actually, I want to do a line chart because I want to show you this massive pullback. So right here, we had Kellogg coming up through the sweet spot very nicely, okay? So our trend is positive. I love the trend. We're in the sweet spot. We have a nice separation between our red and yellow line. The bigger the separation, the better. Now, we had, man, I don't know why this thing keeps glitching out like that. Okay. All right. So we had our price moving up on us very nicely, all right? Now, this day, I think this was Wednesday or Tuesday. Look at how much this stock price pulled back on us. I know it was down 2.5% this day, or 2.2%. And there were a lot of people that were in the bid and ask nation that were saying, should we get out of this stock? Should we get out of this stock? And I looked at it, and here was that day right here. And I looked at it and I said, no, this is exactly what we want. We want to create these W formations, which I'm going to talk about in a second. But we want pullbacks. And the most important thing, look at our trend. It didn't change. All it was a stock price pulling back and creating this new W formation, new support line, which I'm going to get into again. But nothing to worry about. So the trend is your friend. Always trust your trend. The majority of traders do not make money because when they focus on candlesticks. They don't focus on trend. When they see a pullback like this, where the stock price climbs up here and then drops all the way back down to here, they automatically sell because they say, stock's dead, it's over. If all they would do is just look down at their trend and not focus on the candlestick, then look what happened the next day. And look what's happening today. Stock price is moving up on us. Now we're facing a little bit of resistance at our 200-day moving average, but it's no big deal. Follow your trend, trust your trend. If you pay attention to your trend and trust it, you will be successful in this. If you don't, you will not be successful in this. That is the most important thing to take away from this little rant that I'm doing. I have a friend. He trades 5 stocks per year. He does not deviate from these 5 stocks. He does not use candlesticks, period. All he does is use trend. That's the only thing he looks at is trend. And he is an incredibly successful trader because he understands that the trend is your friend, and that's all you need. All right. Support and resistance, I'm going to get into next. And guys, I see your questions coming in. I'm not going to answer questions right now because I want this to be as smooth as possible so people can go back and watch it, and then I will answer all of your questions at the end. So write them down and we can circle back. Oh my God, I just said circle back like a corporate suit, and suits suck. All right. So support lines you're going to see on your daily chart, which is more detailed. Obviously, there's not much over here on this chart. Over here, there's a lot more going on. So on my charts, I have support lines drawn in. On your charts, you guys are not going to have support lines. So you have to learn how to read them unless you find something that shows you support lines. But support lines are very easy to see. Let's zoom out 6 months and see where support is. So support on this, here we go again. Support on this is, I can see my stock price dipped to here, it dipped to here and it went back up. It dipped to here and it kind of just stayed there for a short amount of time. So I know I have a support line right here at this price, which is about 63, I don't know, 63.50 or something. There's a support line there. The stock price, I don't know why this keeps blacking out. Okay. Stock price dropped here. All right. I might just go and use the other candle. Dropped here. We definitely have a support line in here. Again, this stock price pulled back, went up, pulled back, went up. So we have a support line in here. So you can see how I'm just showing you guys that you can see support. It's not anything too difficult to see. Oh, look at that. Here, I just drew this line right here, and I said 63 something. Look at that, 63.36. Is that it's a resistance line, but yeah, it makes sense. It makes perfect sense. And yeah, so you can see, guys, you can draw them in yourselves. It's really not that hard. Zoom out, take a look at the entire chart, and you can see where the stock price keeps bouncing off of or where it can't get through, and you will be good. So, and support is the level where there's a lot of traders that go in there and kind of, when the stock price gets to that level, they won't let it fall through there. And that's when they'll say, okay, I'm getting back into the stock, and they'll push it back up. That's where you'll usually see an influx of volume. Support and resistance can also be moving averages. So you see, for example, on Kellogg, that day that I said the stock price pulled back, it pulled back, it went into its 100-day moving average, which is this turquoise line, and it bounced right back up and closed the day right here. Because you have this long wick, that means that the stock price came down and went back up on you. That is how strong that support line is from that 100-day moving average. So that is support. If you have any support questions, write them down and ask me at the end. Resistance is next. Resistance is the same thing, just a price point that you cannot get through. So resistance on Kellogg, for example, actually, let's go to Cardinal Health. I'm going to show you guys why I sold my Cardinal Health shares the other day. Damn, this thing just keeps going. Good for them. So I am zooming out quite far on this. And I saw that in the last year, let's do a yearly chart. This is why I did it. In the last year, Cardinal Health had a very difficult time breaking through this level. They tried to get up there back in May and broke back down. Tried to get up there in August, broke back down. Tried to get up there in November and broke back down. This time they came up, and once they started running into that $60 area again, $59, this is the day that I sold right here. And I sold it around the top of this candlestick because this price moved up on me. It hit that support, that resistance line again. And I said, okay, I'm going to trust my rules. When I hit resistance, I'm going to sell my shares and move on. And I did. Now, of course, it went up further, but it is what it is. You got to follow your system. You got to follow your rules. We talked about it on the live stream yesterday. The reason that I'm successful is because I follow my rules. Did I miss a little bit more? Yeah, I did. But I was up in that, I looked at it saying, I'm in that overbought range and I'm hitting that resistance area that it has not been able to break through for the last year. I'm going to sell my shares, move on to the next stock. Oh, God. Hold on. I got to open my window. It's 1,000,000 degrees in here. Andrew is not going to like that. He complains when I open my window. But this office is so hot. All right, snapbacks. So I kind of talked about snapbacks, but I'm going to get into them again, and I'm going to go back to Kellogg, which is a great snapback that we saw. So what snapbacks are: when a stock is trending up or down, doesn't matter, but I'm going to talk about mostly up, and then the direction of the share price goes in the opposite direction. And this is, like I said, when people get snapbacks, they panic and they sell their shares and they exit. Now, it's counterintuitive, but I want snapbacks to happen. And this goes into that W formation pattern that I'm talking about. Is that what's next? Yeah, W's are next. So I'm just going to cover snapbacks and W's all in one. So this right here is a snapback in the price because the price was moving up on us and then it snapped back on us. But I'm going to pull up that line chart again and show you guys what snapbacks do. Snapbacks create these nice W formations with higher lows. So you have three kinds of W's. You have, of course, your normal W, where the bottom of your W is exactly the same level. You have a W that looks like this, which your right side of your W is lower than your left, meaning that the stock price dropped, it moved up, and then it dropped below the previous support line. Let me know if that makes sense to you guys. It moves, the stock price is here, drops back a little bit, moves up, and then falls back below that previous high. That is not ideal. The most ideal W, and the ones that we're seeing on Cardinal Health, are ones where you stock price goes like this, moves up, then pulls back a little bit and continues to climb like that, creating these what are called higher lows. So the low, so you have your low price here, moves up, pulls back, but it's creating a higher low than right here. Again, stock price moves up, pulls back a little bit, creates a higher low here than this previous low. And these are W's that we like to see. So that creates, hey, Paul. So that creates these W patterns that are moving higher lows. And each one of these is a new support line that is just giving us buying power. That's disgusting. Buying power to buying support just to keep moving up in price. So even this one, this is Kellogg. It had a great run and then it pulled back. It did do a pretty large pullback, but the most important thing is that this low is still higher than here and here and here. So that's great. That's exactly what we want. So I hope you guys are understanding these W formations. The chart formation makes sense. How do you read the candle? It did not look like this in candle form. Yeah, it did. It did look like this in candle form. Here's the candle. You have, here's your W formations being created. Higher low, higher low. This stock price pulled back, higher low. Then you had this run. Imagine your line is here, pulled back, and it bottomed out here, higher than this low, and the stock price moved up on you. And that right there is your W formation. So you can see it on a candlestick. You can see it on a line chart. The more repetition you do, the more, the better you'll get at this. Good question, Colin. So let's see here. I'm pulling up Cardinal Health because I want to show you, and I hope it shows it. Aha. So look how great Cardinal Health looked running up. Here is where it began to move. This is probably where we bought, right around here. I don't know the exact day. And we started getting these higher lows. Now, this day, I remember saying to everybody, I need this stock price to close above this previous low. If this closes down here below this level, like Colin just said, and then goes up, excuse me, there's a high likelihood that I would have sold my shares right here. Even though it did go back up, that is just the process that I use. So that is a great question. And if you do start getting lower highs, there is some indication that maybe this thing is going to be some kind of reversal. I may have not sold all my shares here. It just depends on what I would have seen that day. I may have just taken my profits off the table, and I'll get into profit taking. But the fact that my trend was still looking really good may have not made me sold all my shares. But it does make me a little bit leery. And I did say to the Bid and Ask Nation at that moment, I said, guys, I need this price to close right here. I needed it to close above this level, and it barely did. So that was good news. So, yeah, even with the trend still going up. Good question. The reason that I may have taken profits instead of selling all my shares there is because my trend was still going up. But if you do start getting lower highs, that is some kind of indication that things could change. And if this stock price did close down here below this level, there is a good chance that this would not have happened. So, yeesh. All right. So that's snapbacks, W formations. This I want to just throw in there because I say it all the time. Market specialist. Market specialists are in the New York Stock Exchange and S&P. There's only one specialist that chooses those ask prices in the bid and ask difference that I talk about. When you go to the NASDAQ, there's what are called market makers. And there's multiple market makers that set the price. So if I'm doing something that's a little bit more risky of a stock, I like trading stocks that are in the S&P more because I'm playing against one person. I'm not playing against an average of market makers. This is really not that important. I just want to make you guys aware of it. All right, the bid and ask difference. Everybody, this is the one that people are asking about. Let's see here. All right. Bid and ask difference. The bid and ask difference is the difference between the bid and the ask. And all it is the difference between those prices. Now, the bid is what the buyers want to pay for the stock. This can be market orders that are already being executed. This can be stop orders, limit orders, what have you. The ask is what the market maker or the specialist wants the buyer to pay for the stock. So there's a reason that I tell people do not trade before 10:06 in the morning. Market opens at 9:30 Eastern time. It runs till 10:06. I typically do not touch anything until 36 minutes after because all of that pre-market trading gets settled. All of the government buying futures contracts get settled. It takes about 36 minutes for that to all settle down. During that period, you're typically going to see bid and ask price differences rather high. Not always, but you will see them higher than normal. So I like to get that first 36 minutes out of the way. I usually don't trade. Now, I usually don't buy, I should say. For example, on Wednesday when I sold Cardinal Health, I sold it at the top of the candlestick of the day. And the reason that I did that at, I think, 9:45 in the morning. So in that first 15 to 30 minutes, you're going to get a big move in price typically. So if you have shares, take advantage of them. I mean, take advantage of runs like that. Somebody said, right when I sold it at 9:45, everyone was like, you broke your own rule. I'm like, well, I don't buy before 10:06 in the morning, but I will take advantage of stupid runs in the morning where everybody's just, all the overnight trades are settling down and I'm going to get some big run. Now, Wednesday, I look great because I sold it at the top of the candlestick. Now, not so much because it broke through the resistance line, but yeah, so that's a bid and ask difference. The bid and ask difference, and you always want your bid and ask difference to be 1 or 2 cents. That means that there is some kind of consensus between the market maker and specialist and the buyers of the stock. If you have a stock price that is at $10 and the market maker wants everybody to pay $10.15 for it, but the market wants to pay $10 for it, there's a 15-cent discrepancy in there. People always say, when I buy a stock, every time I buy it, the stock price pulls back on me. Probably because you're not looking at your bid and ask difference. There's a manipulation going in there that the market maker or specialist is trying to get to squeeze out a little bit more out of you, and you fall for it. And then when you fall for it, when they see an influx of shares at that price, they'll drop the bid to, they'll drop the ask price down to reality, and you lose your 15 cents a share or something. So that's how that works. Is there any significance between the bid and ask prices above the stock price? I don't understand your question. Is the bid and ask important for day trading? Great question, Gianni. No, the bid and ask difference is not important for day trading. If you are going to use a 15-minute chart, do not concern yourself. Oh, wow, look at the market today. Do not concern yourself with the bid and ask. Only concern yourself with the bid and ask if you are going to be doing long-term trading or daily swing trading. Let me rephrase that. If you're doing long-term trading, obviously, and if you are swing trading for multiple days at a time. If you're doing 15-minute chart trading, you do not need to use your bid and ask. Can you see bid and ask on TradingView? I don't know. You could literally see bid and ask on your iPhone stock thing right here. You can pull up any stock and just look at it, and you'll have your bid and ask price. Anytime you go to execute a trade on any of your platforms, you're going to see the bid and ask price. So just make sure it's 1 cent. All right. Next, consolidation. Consolidation is basically when a stock price remains range bound for some time and it's stuck between 2 moving averages or something. So let's go here and see if we can find some kind of consolidation on a stock. Let's zoom out. So this is basically consolidation. And it's basically, oh my God, your stock is basically just range bound. So you're just kind of stuck in a range and you're not really going anywhere. You're just kind of bouncing up and down. You see it a lot in moving averages. So right here we have our 50-day and 25-day moving average. That's your purple and yellow line. And you can see the stock price moves up and it can't get through the moving averages. And it kind of moves up again and can't. And moves up again and pulls back. So this is consolidation. It's just kind of just range bound and stuck. Even here with your 25 and your 100-day and 200-day, you're just kind of stuck in this area. You can't break out one way or the other. So that's what consolidation is. So if you hear me say consolidation, that's what I'm talking about. Relative strength, I'm just going to explain this one. So let's say that you have a market day where, let's use the NASDAQ for example. This is a great example. Let's say the NASDAQ is down 2% one day. And you look at Microsoft, and Microsoft is not down at all. Let's say it's pretty neutral, or it's positive, or it's barely negative. That is a stock that has relative strength. It is going against the trend of the NASDAQ or the S&P or the entire market. So those are powerful stocks because they are not moving with the entire market. Those are ones to just keep an eye on. Grab them, throw them on your watch list, and move on. Moving averages I keep talking about. So I use 4 major moving averages. I use moving averages they're only on my daily chart. I do not have them on my weekly chart because remember, my weekly long-term chart, all I care about is that trend and my candlesticks that I look at to know when to add. I do not use them on my 15-minute chart. Don't care because I'm just trading 15 minutes. I'm going by the stochastic trend line. They're only on my daily, and I use 25, 50, 100, and 200. The reason that I use these is because I'm looking at them for support and resistance. So you can see here that, what company is this? Oh, hold on, I just zoomed in too much. Hold on a second. Now let me refresh. All right. So when we have, here we have a stock price that's coming down and it kind of hits the 100-day and 25-day. And you can see that it really doesn't drop below that 200-day moving average very much before it pops back up. Maybe drops below a little bit. So the 200-day moving average right here is support. And you can see this stock price actually closed right on the 200-day moving average. It pulled back down. That's your long wick. And then it went right back up and closed there. So you can tell how there's resistance and support. That's why I like trading stocks that are over all 4 major moving averages, because they just go. There's no big support. I mean, there's no big resistance to get through. Let's look at K real quick. I think that this thing is going, yeah. So this thing is going into its 200-day moving average right now. That's all. To get through a 200-day moving average, you need a lot of volume and you need a lot of consistent volume. And this price, I mean, you did for these 5 days, but you are not getting that volume that it's going to take to push a candlestick through that that moving average. So anytime that a stock price, if you're doing a swing trade, is going into the 200-day moving average, you should take your profits on it and move on like that. All right. What else we got? Dog stocks. So you guys hear me talk about dog stocks. Man, I need what's a good dog stock? I think Qualcomm is right now. Let me go back to BP, zoom out a little bit. Okay, this is good. Let's go here. Okay. So this is a dog stock. Bum, bum, bum. All right. I'm just going to do this without this. So you have your stock price coming down. Let's keep an eye on the sweet spot down here. It's moving down in price, moving down, and it gets to the bottom and it just kind of goes sideways for a very long time. This thing basically went sideways from July through October. As it goes sideways, the stock price just continues to move down, down, down. Now, when I find dog stocks like something like this pattern, I get very excited because I can go ahead. This is my perfect opportunity, and this is why I came up with the tracker share, because I can go ahead and buy one share of a stock for 20 bucks. Worst case scenario, BP goes out of business, goes bankrupt, nobody buys them, they go to zero. They disappear off the face of the earth. I lose $20 a share, that's it. Best case scenario, I buy a stock for $20, it moves down to 15. Then when nobody's paying attention to this thing, because BP has been dead for multiple months, the stock price just keeps going down, I start to get this turn in stochastic and it starts moving up on me slowly. And right when it gets into that sweet spot area, I go ahead and buy it. And I have all of this room to run on BP. And look where it is now. So this basically moved from $19 to, man, you could have taken this thing up to about 26 bucks before you had to exit your shares. So that is why dog stocks are powerful. Nobody's really paying attention to them. They're dead. They're not sexy stocks. You're not going to see them on TV and stuff. And then all of a sudden, when this thing moves up into 32%, you were the first one in there, and you can get in right here and ride through the entire cookie jar and get to the top and make your money. That's why I love dog stocks. So that's why I came up with tracker shares. That's what I mostly use tracker shares for. Qualcomm, not that it's really a dog stock, but I love that it's just coasting on the bottom here. And eventually, this red line is going to turn up and it's going to start moving into that 32% area. Apple, same thing. These are stocks that I use tracker shares on. Apple coasting sideways. Eventually it's going to turn up, and I'm going to be the first one to get in there and grab it, hopefully around this area, $128, where then I start getting green candlesticks. Hopefully I can get a run up to 144 or something like that. So that is what dog stocks are. Now, power stocks. Guys, tickle that like button. Seth will not be happy if you don't tickle him. Basically, tickle his little beard. All right, power stocks. So power stocks are stocks that are making new 52-week highs, and they're over all four of their major moving averages. So let's see. I don't know if Texas Instruments is a power stock anymore. Let's see. Zoom out a year. Zoom out a year. Okay. So basically what this is a company that comes through the sweet spot and starts moving on us to the top, to this 80%. This isn't a good one. I want to find a better power stock. Let me see here. I think Square may have been one back here and here. Okay, so let me grab March through. Give me 1 second, guys. I want to give you a good example before I. Okay, do that. March through December. All right. So this is Square, March through December. Basically, we came down, we made the move through the sweet spot, which is great, and then we just started going sideways. And going sideways means, just as it means on the bottom, the stock price can just keep moving up on you like that. Now, the most important thing is, as it's moving up on you, it's creating new highs, new 52-week highs, and it is over all four of these major moving averages each time that it makes those highs. And you can just see how nice this cluster, how tight this cluster is, moving up for such a great amount of time. I mean, this is months and months that this is happening. So again, the reason that I'm using this chart over here, my daily chart, is to see the detail of these major moving averages. Other than that, I'm looking at this. I'm in the overbought area. I'm just going sideways for multiple months. Keep adding on new engulfing candlesticks, and these are power stocks. So power stocks give you the confidence to just keep moving up in price. The most ideal time, obviously, to catch a power stock is down here. That's when you guys ask me, you would say, is Square a power stock, and can I buy it right here? Well, of course you can, but you missed the best part of the run, and you don't know that this thing is going to keep going like this for all this time. This thing could easily, at some point, just drop, and we could have had red candles coming down like this, and it comes back to reality. In retrospect, it's easier to say, yeah, this stock price would have continued to climb for another 6 months. But when you don't have this to see, all of this is blacked out, then you know that, well, you don't know your answer. So that's a power stock. Let's see. Laura asked me those questions at the end. Mid-May. Well, no. I mean, you may have sold mid-May, but again, when you get into this area, I think you're probably referring to why I sold Cardinal Health, because it got over 80%. It doesn't mean, when you get over 80%, it doesn't mean sell your shares. By any means, it doesn't mean sell your shares. I sold Cardinal Health because I was hitting those 52-week highs that it could not break through 2 or 3 previous times. Square did not have that problem. So you could have easily just thrown a stop on this. When you get into this 80% range, I recommend using stops, and that is how you save yourself from losing. What if a stock breaks a 52-week low? Short it. All right. And guys, I'm not going to cover shorting today, really, but there is a shorting seminar that was for patrons only, and it is on somewhere on the Patreon, and somebody posted it for me. I actually don't even know where it is. All right, candlestick. So I keep talking about candlesticks. I probably should have put this at the beginning, but you guys get the gist. Candlesticks are just, they display the daily movements of the stock price, or in the 15-minute chart, they display the 15-minute chart movement. So whatever you set your time frame to, you're going to get that. You can set weekly candlesticks, which I think are useless, 1-minute candlesticks, whatever you want to do, you can do it. So there's different types of candlesticks. Your dojis. Dojis are basically candlesticks that have moved. Let me use blue. Now let me use red. You basically have a little bit of movement during the day, but you have wicks on them like that. So those wicks mean that the stock price moved down to this point and then pulled back up on you. So wicks just mean that the price was there during the day and then it moved to the opposite direction. This one, the stock price moved up on you during the day, and at some point this candlestick was filled out like that, but the stock price pulled back down, and now you have that wick that I drew in there. So this is what dojis look like. They're just basically candlesticks in the middle with long wicks on them. Do not add to dojis. You want good engulfing candlesticks, which we'll cover next. Spindles, basically the same thing. It's just the stock price started here during the day. It moved up, it moved down, and it just closed right back at that neutral area. So again, don't want to add on spindles. Hammers. There's a hammer. Hammers typically indicate changes in direction. So if you have a stock like this and you have a hammer like that, that means that the stock price moved down on you. So there's an indication that there's some selling volume coming in there, but then the stock price moved back up. The fact that there was indication of a downward movement that day does mean that there could be some kind of reversal. So when you see hammers, that usually means, not always, but sometimes can indicate that you are going to get a change in direction. Inverted hammers, same thing. Inverted hammers are just the opposite of hammers, change in direction. Engulfing candlesticks are the most important. I always say add on an engulfing candlestick. So let's say you have a candlestick like this one day. Let's say this is today. This is Friday. I want, let's say you have a candle here, and let's say you have one here. So the stock price isn't really doing much. And I say the next day, on Monday, I need an engulfing candlestick to do something. What I'm looking for is a big, fat, green candlestick. I should probably use a different color. Pretend this is green. A big, fat, green candlestick moving up and taking out the previous day or the previous high. So when I buy a stock, I want my candlesticks to be fat like that. I do not want to have candlesticks that have any sort of wick at all. And when I say to you guys, you need to buy on the high of the day, and you have a candlestick like this, if the stock price does move up again and take out the previous high of that day and this whole thing becomes fat, go ahead and add to it. Because again, we're giving ourselves the highest probability to make money. So we always want to add on engulfing candlesticks. Is there a morning, evening start of a sign and change of direction? No. You might be able to find patterns on individual stocks, but you're not going to find an overall market thing, and I don't try to do that. I do whatever the chart says and do it that way. What time frame chart wise is this? Any time frame. You always want to add on engulfing candlesticks. No matter what trade you're making, you want to add on candlesticks that are at the top of the candlestick. So tracker shares. A lot of people have been asking. Again, the single candle represents day trading. So Benny, I think you need to, the candlestick is what you make it what you make it want to be. So over here, this is my daily chart. This is my long-term weekly chart. This is my daily chart with more detail. Each one of these candlesticks on both sides represents one day. Now let's go over to my 15-minute chart. This is your 15-minute chart, and each one of these represents a 15-minute period. That's it. It's not a day. All right. So, tracker shares. This is where people have a billion tracker shares. So you guys ask me like a million questions a day. I'm not telling you to put a tracker share on everything. So what tracker shares are just putting a company, putting one share on that you can be engaged with the stock. So every time you open up your trading account, you see that stock's there. Let me show you an example over here. So this is my watch list. Look how long my watch list is. It's endless. So I'm going to be missing, if I put anything on my watch list, I'm going to be missing it. Now, if it's in my brokerage account and I see it every single day, there's a higher likelihood that I'm not going to miss it. Now, it doesn't mean go throw a tracker share on Square right now because it's in the middle of the sweet spot. That's not a good tracker. A tracker share is something like throwing something on Apple because it's getting ready to go. It's almost there. Qualcomm, it's almost there to ready to turn up. Or if something's very cheap like BP, throw a tracker share on. That's what you use tracker shares for. You don't use them for just going and buying everything under the sun. And before trades became free, this is what trades used to cost, $5 to $7 a trade. I never used tracker shares because it was stupid. It was just dumb. Now it's basically inexcusable not to use tracker shares. And because they're free. Trades are free, except for options, which are like 65 cents. So, all right, taking profits. So when we talk about taking profits, when I say I take profits on something, it doesn't mean that I'm selling all my shares. It means that if I have $100 on something, let's say I put $1,000 into a trade. The stock price moves up 10%, and I now have $1,100. I sell $100, which is my profits on that, of the position, and then I move on to, I keep my initial investment. So what do I have here? 500. Okay, just ignore this. Listen to the example that I just said. If you have $1,000 and you buy shares, your stock price moves up 10%, so you now have $1,100, okay? You are going to sell $100 worth of shares, which will you'll take your profits, and that'll leave you back with your initial investment of $1,000. So it just lets you go home, and now you're playing with the house's money, basically. So that's taking profits. Where are we? Types of orders. I'm not going to go over that. You have market, limit, stop. You guys can read into this. Go to Investopedia and get on it. Advanced orders. I always say go ahead and buy over. Say buy on a new high. You could put an advanced order in at that new high. So say I tell you, if I was you, I would buy over $10.05. Go ahead and put an advanced order in to a limit order of $10.06, and your shares will execute at that level. Stops. My big thing is 1 to 5%. Make sure you're using stops of 1 to 5%. Short selling, go to the shorting seminar. I don't want to talk about that right now because we're going to get confused. Inverse ETFs. So those of you that love shorting, and I don't know if I talked about this in the other one, in the shorting seminar, so I want to cover it right now. Say you want to short the S&P. Instead of spending $300 and whatever dollar it is per share now to short the S&P, you can go in there and buy long SDS. SDS is the inverse of the S&P, but it's like $11 a share. So if the S&P drops in price, SDS will go up in price. So those are inverse ETFs. Earnings. Somebody asked me this question. Man, that's a lot of talking. Earnings. You need to know when your company earnings are. I am never in a stock during earnings because I want there to be, because earnings are a crapshoot. You can have the best news in the whole world comes out. You get a big revenue, big earnings per share, and then all of a sudden, boom, the stock goes in the other direction because the analysts say so. So anytime an earnings date is coming up, it is your responsibility to know that earnings are coming up so that you don't get burned on the stock. There's going to be times where you're out of the stock and the stock price jumps up on you and you're like, oh man, I could have had that. More times than not, you will get burned. Trust me, I've done it. Also, if you're doing pharmaceuticals, know the FDA dates for drugs. Those are very important. Bristol Myers has something coming out on tomorrow. Monday will be maybe a swing of price on Bristol Myers. Dividends, you're typically going to see a stock price pull back when there's an ex-dividend because the company is taking money out of the company to pay shareholders. I don't care about this. I'm staying in the stock. It's not as important as earnings to me, but just know that that can happen to you. Also, I don't recommend buying stocks for dividends when you're charting. When you're investing, totally different story. I try to buy every stock for my value portfolio with a dividend, but sometimes not. But that's not the point. For charting, do not try to buy stocks and time them based on the dividend. I make the example here. That's like going out and getting an ice cream sundae to go buy the cherry on top. Just go buy the damn cherry. So be careful. QE, Feds print money. That's why our market is insane. Buy the pullback. It's basically, everybody tells you to buy the pullback, but you guys are not hype people, so I'm very happy about that I don't even have to talk about that. All right, I'm going to get into pattern recognition. We already covered engulfing candlestick. We already covered W's, consolidation, head and shoulders pattern. And this is all in the Trading 101 series. So I'm going to hit it here, but also go and hit it in the Trading 101 series. What resource do you use to check drug pipelines? I go to the company website. So Bristol Myers, I go to their website. GSK, I go to their website. Amgen, I go to their website. I do have a little bit of a background in medicine, so it makes it a little bit easier for me, but yeah. All right. Head and shoulders pattern. So basically, the stock price moves down on you a little bit, pulls up, moves down, and it creates basically a head. And here's your, let's draw a smiley face. And here's your shoulders. And then you have arms over here and stuff. So, oh man, I'm a good artist. I'm almost as good as artist as I am at trading. All right. So that is basically your head and shoulders pattern. Anytime you see that, you're typically going to get a reversal in price or a drop in price, just like you see in this chart. So make sure and the only way for you guys to learn how to do this is exactly what I did. And that is pull out a list of stocks. I go here and I go, this is literally a list of stocks, of 500 stocks from A to Z. And I just click a stock and I look at the chart and I look for head and shoulders and I go to the next one. And then I go to the next one. And I just keep going down the list. Obviously the server is very slow right now. But I just keep going down the list looking for head and shoulders patterns. Here's a head and shoulders pattern right here. Head, shoulders. Here's a head and shoulders right here. Head, shoulders, drop in price. So that's all you can do to learn head and shoulders. Ugly face patterns are kind of the opposite. You have, here's your two eyes, and here's your mouth. And ugly face patterns indicate drop in price. So basically, you have a drop in price from almost a head and shoulders pattern, and then you get this little rebound in price, and then boom, it just goes on you. So be aware of ugly face patterns. And I know that these are hard to recognize, but this is what's going to make you a good trader, is going in and just going over these over and over and over. Gypsy, the head and shoulders, that was a good question that you just deleted. The head and shoulders it's typically an uptrend, but you can see it. I mean, it could be a mix of an uptrend and a downtrend. The trap door. So the trap door is basically when you're looking at your stochastic line here on the bottom. When your red line is under your yellow, and you see how, guys, you see how it starts to turn up like that, the red line? Now to go into the sweet spot, of course we need red over yellow. So this basically means that this red line, I'm going to draw it for you up here, it's coming down, and it's starting to turn like that. And this yellow line is not yet, it's just like that. So your yellow line is still on top of your red. As soon as this red line crosses through, whoops, that's black. As soon as this red line crosses through, oh, man, like this, that is your trap door. So it is very important to, when you have trap doors, you need to make sure they're closed. Because if not, you could buy a stock, your red line is like this, your yellow line is on top, and it looks like it's going to change. It looks like it's going to change. But technically, you're still in a downtrend. This thing can easily just keep going. It'll just start. Why do I keep clicking the black? It'll just keep going like this. Yellow line will stay on top of it, and it'll never change. And your stock price just keeps coming down, 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 and you're losing money. So make sure your trap doors on your stochastics closed. Do you buy during trap doors or hold? I do not. I am not buying until my trap door is closed. So that is a good question. Tweezer pattern, and we missed this one the other day, and I can't remember the stock, but it was a great, I think it was CPRX, wasn't it? I'll bring it up in a second. So tweezer patterns are just that. 2 candlesticks with very, very long wicks on them, side by side, 2 days in a row. That indicates a change in direction. And you had the tweezer pattern, and there was your change in direction. Now let's go to here. It was Ben. I can't remember Ben's last name, but no, it was was it CPRX, I think? Catalyst Pharmaceuticals, that was it. Dun, dun, dun. So what we had was these 2 days right here where we had these long wicks. The stock price ran up on us and then pulled back. Ran up on us and pulled back. And then the stock price the next day fell. And it dropped all the way down to this area. And I was like, okay, I don't really know. Let's just keep seeing what's happening. You have a nice trend. It was a tweezer pattern. So tweezer pattern, it was just a change in direction. Our trend is still looking good because we had an okay day yesterday and today it's not really doing anything. So our trend stayed fine. I was concerned that what was going to happen was after that day was this, but that didn't happen. So we're fine. We are fine. Tell me what show that's from. So that is tweezer patterns. Sharp arrows. These are something that I just came up with. They're not anything definite, but when you get a stock price that runs up on you and then pulls back very quickly, it runs up on you and pulls back very quickly, it typically means that there's going to be, it means that there's not a lot of volume because the change is happening so quickly. And that's basically it. You could see right here, this thing moved up and then just came down so quickly. This was more of a gradual move, so it wasn't that concerning. You would have seen trend change here. This is still, when the stock price pulled back, you still had green candles there. You still had green candles. So we were still in an uptrend. But that is, those are sharp arrows. 50% rule, I think I beat this thing to death. You have your high, oops. You have your high, you have your low, then you have that 50% area in the middle, and it's just overhang that that traders will see. Once the price gets up here, they sell off their shares. Try again, sell off their shares. Try again, sell off their shares. So this is just negative area. Zoom out to like a year or two, and you'll see it. So that area is just called overhang. I went through a power stock and dog stock already. Breakaways. This is a good one. So if you see a stock price drop on you, this is a gap down overnight. I bet you this is Biogen. I can't remember what chart I pulled this from, but it's probably Biogen. Breakaways are basically the stock price pulls down on you, and then over time, you'll get about 50% of the way back. And at that 50% of the way back to the top where you started losing money, a lot of people will say, well, I got 50% of my money back, I'm selling. And a lot of people will do that, and then you get another breakdown, another breakaway. And this is very dangerous for stocks because it takes them a very long time to get back up to their previous high. They need a lot of news. So just be aware of breakaway patterns. They can happen and get you burnt. I'll leave this up for like 10 seconds. This is just correlation between the interest rates and different sectors. Screenshot it if you want. This is between the dollar and different sectors. Screenshot it if you want. This is also in the Trading 101 series. And yeah, that's it. So that's it for those. I'll open it up to question and answer, and I'll stay as long as y'all want me to. So, man. Do you exit your positions if you see head and shoulders, but the trend line is still up? I put stops in place if I see a head and shoulders and the trend line is still up. That is exactly what I do. Apple is in a breakaway pattern. I'll be the judge of that. Nah, Apple didn't gap down. Apple, you have to have a gap down. Remember, when you have a breakaway pattern is, wait a second, who's this one? Shoot. It was, you need a gap down, not a gradual move in price down. You literally gap down in price. It's not candlesticks moving down like this. All right. Stocks become dogs. Do you get out? I mean, if a stock is becoming a dog, that means you should be shorting it. Were you always this disciplined in your rules? Yes. What software are you using for this, and can you recommend any free applications? We are going to have it exclusive software, yes. Use TradingView. I want every single person here using TradingView for their long-term chart and their daily chart. For your 15-minute chart, I don't care what you use, but use TradingView. There is a PowerPoint presentation of it in the Patreon announcements made by Simple Living Cash. He is the man. Looking at the square example earlier, if you had got in as it entered the sweet spot, when would you have sold? I would have sold. I would have stayed in it because it was making new highs, new 52-week highs. Let me go back and see if I can pull that up for you. Whoops. And I think we were in that. Yeah. So because we were just continuously making new highs, I would not have sold until this stochastic dropped below 80% right there. As soon as my red line dropped below 80, that's when I would have sold. And that's just a very basic rule for everything that I do. All right. What's the chart style you have on the left in comparison to the one on the right? The one on the left is my long-term chart. This down here is a weekly stochastic. So it just moves. The trend is a lot slower. It moves by the week. This is my daily stochastic. It moves by the day. So it moves a lot quicker. Also, I have moving averages on this chart. It's just more detailed, as you can see, and I have volume here. You can figure out how to set this up in that Patreon announcement in the PDF file. Let's see here. I'm going to try to get all your questions. So is there a PDF downloadable and we can save? Sure, I'll post this if you want it. You lost me on power stock. If it's over 8, okay, good question. So he said his question is basically, when you get over 80%, is it not good to get into the stock? I'm not saying that it's not good to get into the stock if it's a power stock. I'm saying that you missed an incredible amount of the run. If you are in this area over 80% buying a stock, make sure you're buying on a new 52-week high and make sure you have stops in place for when the stock price drops through 80%. I would just do a trailing stop of 3 to 5% so you don't get burned. Do I buy in for long-term during dogs? Yes, you buy long-term and only with a scout until you get into the sweet spot. This stream's This seems pretty straightforward. Why are so many traders losing money and not following a system? Because people are not disciplined. Guys, I'm a very, very disciplined person in pretty much everything in my life. I don't mind sitting and waiting. I know that I'm also a pretty conservative person in everything I do in my life, so I'd rather make money than big swings. Also, a lot of people try to complicate this. They use these Fibonacci things and this thing and that thing. I don't care about that stuff. This is so basic. Why complicate it? I'm not trying to sound smart. This is so dumbed down that literally the person who taught me this dropped out of high school when he was 16 years old. He's dyslexic. He's now 75 years old, and he's taken, he trades for a living now, but he's taken 2 companies public, and this is how he learned. I also trained some guy. He lived in the hills of Montana. He did not have a high school degree. He was working as a cook, and I started to show him how to trade, and he is now making 6 figures living in the woods in Montana. And the first time he ever started trading, he got a computer, and that's when he started trading. I mean, this is so simple. There's no reason to complicate this. If you follow what I'm saying, you will make money. What's the next bid and ask group trade? I don't know yet. Can you give me... So another thing, guys, the way I trade, it could be weeks before I make another trade. I do not make a trade unless I am going to make money. There's a high probability of making money. I am not just going to get in a trade for trading's sake. I'm not trying to collect $100 here, $100 here. No, I want to, if I make a trade, I want to make a dent. So that's what I wait for things to set up and go from there. Can you give a couple examples of when to get out of longs? When do you get out of stochastic? Goes below 80. All right, Kevin, I don't really understand your question, but if you're ever in a long position and you get into this overbought area and you drop below 80%, sell. That's really it. Hold on. For stochastics, are you using the weekly or daily as a time range? When do you switch between? I do not use a daily stochastic. This is just here because it's here. I can actually get rid of it and I don't care. I do not use a daily stochastic. I don't care. I don't care what the stock does day to day. I care about the week. I care about the overall trend. That's what I use for my stochastic. I'm not going to do individual stocks right now. Somebody asked about Home Depot. I am buying to keep the stock long term. Wait, I don't know what that question is. I will give you the PDF. Do you need the daily and weekly stochastic to concur? What if they are opposite trends? There are very often going to be opposite trends because the daily defines what happens by the day. I care about the weekly because I'm going along on a stock. I want to buy stocks for multiple weeks at a time and make money on them. So yes, they will definitely differ in trend, but I think that everybody should be looking at the overall trend on a weekly stochastic. What should you do if the volume jumps tremendously? Oh, that's right. You wanted me to look at, I think it was Viacom, right? Spicer? Okay, what should you do if the volume drops tremendously and the stock moves an absurd amount? So this is a tough one. I mean, let's zoom out a year and look at Viacom. This is your perfectly textbook power stock. And this is why we use stops when we get over 80%. So you were making new 52-week highs on Viacom, absolutely crushing it, going up, and just look how tight, the tighter the cluster on a power stock, the better off you are. And look how tight that is. Then all of a sudden, you just had this gap down, and the stock price moved down, 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 down. So, that's why we use stops. When we're over 80%, we use stops so that you would have been saved in this area. I don't really think it comes back to volume. I think it comes back to just using stops. All right. So to initiate a position on Amgen, we are waiting for the yellow line. I will show you Amgen just because I did a video on it this morning. I like Amgen. I'm not waiting for the yellow line. What I'm waiting for is an engulfing, whoops, what the hell is going on? What I'm waiting for is an engulfing candlestick to take out these two right here. So I want to be something like that. I got to take out that high of $250 a share or whatever it is. That goes back to buy high, sell higher. What are your golden rules? It posted somewhere. So I have posted it's a buying a stock checklist. It's in the Bid and Ask Nation announcement and welcome page. So go there. And if you're not in the Bid and Ask Nation, join it and you will get it. Let's see. You say to limit the amount of stocks you trade. What are the characteristics of looking for a good stock? I want something that, I mean, in an ideal world, something that moves through the sweet spot pretty consistently. Like this one, actually. Like I want to look for stocks that move through the sweet spot like this. Very smooth, very gradual. I'm not saying don't trade Viacom, but like you see how down here it kind of couldn't decide on a direction. It just goes up and down. Even when it's coming short, it doesn't really know. The trend changes on you. And that's indicated by every time that trend changes, my stochastic changes. My candles change a different color. And that's why I like using these to show you guys. So I look for stocks that are kind of smooth moving. How much of your portfolio is in ETFs? 0. A stock is above all moving averages. Hold on. Where was that? In the past, there was one day of resistance that's in your way of going higher. Do you worry about that day? Reference VZ. I'm just going to see what he's saying. A stock is above all moving averages. Well, it's not above all moving averages because we're going right into our 100 and 200 day right on top of each other. I would be taking, if you're in Verizon right now, I would be taking profits right now because this thing is going to pull back on you. Unless something comes out that Verizon solved 5G, the Verizon's going to pull back on you today. SO, the chart on the left is a 5-day chart. No. It's not a 5-day chart. It is, each one of these candles is 1 day, but it is for people that want to trade 1 to 5 days. So let's say you want to buy a stock here. This is a swing trade. So you would buy it here because you had a nice engulfing candlestick. You can add here. You can add here. Nah, you wouldn't add here. But as soon as you go into resistance, right here, 57.53, or you're going into the 200-day average and the 100-day average, you sell your shares, you move on. So that is a 1 to 5 day trade. That is what I mean. It's not 5 days at a time. How can you apply this with such a low amount? No problem. You could start trading with $100. You don't need a lot. To make a living, you need a lot. But to do this, excuse me, we have people that are doing this. They're trading cheaper stocks. They're not trading maybe $60 stocks. Maybe they're trading $10 stocks and they're making $30 at a time. That's great. Are the most profitable ones those with 8 pillars and in the sweet spot? No, I don't. You have to separate 8 pillars from this. They're not even close to the same thing. Do you buy in a 5-minute time frame or higher? I use 15-minute and I just like 15 minutes. I do not like anything more or less. Can you explain stops? Or is it a stop limit? You can use stop limits to sell. And let's say right now you have the stock price is at $57.97. Say you want to sell it at $57.50. Put a stop in at $57.50. As soon as the stock price touches $57.50, boom, sell it. All right, next. Can I get a free account? Click on. Oh, you're talking to somebody else. If I find a dividend stock and wanted to buy in or keep for retirement, when do Do I buy when the stock is below 32%? No, you buy when you get into the sweet spot above 32%. Where were we? No way Verizon is going to solve 5G anytime. So it's funny, back in like 2017, 2018, whatever it was, I dropped out of med school. And right when I started, I started my fund, and I had a friend who was like, 5G is the next big thing. You got to buy all these 5G stocks. And I looked at what 5G was. I'm like, 5G is a fallacy. There's no way that this can ever happen to the grand scale that they're talking about, where it's faster than Wi-Fi and it's across the entire planet and this and that. I mean, for God's sakes, they barely have 3G in the Caribbean islands, and you want to give them 5G now and do surgery? Come on, get real. Grow up. What do you mean by long-term trading? So, David, I mean long-term trading, I mean multiple weeks at a time being in a stock, weeks to months. When we enter at 32% and let it ride as long as it takes, yeah, let it ride as long as it takes, as long as it's in the sweet spot, as long as your red line's over your yellow. Good question. Not sure I follow you on VZ. Momentum looks good. Engulfing candlestick. Why would I sell now versus enter? So if you want to do it, if you're on a long... Good question, but you're getting confused. He was asking me about over here on the daily chart making a swing trade. If you want to do it today, that's perfectly fine. Don't concern yourself with moving averages because you're getting a nice engulfing candlestick. You're coming through the sweet spot. That's great. Bid and ask difference is 1 cent. You're fine. His question was on over here on a daily chart. And if you're doing a swing trade, your goals are very different than being over here on a long-term chart. Did the Montana guy cook? Or, I don't know. Why would you take profit? Yeah, guys, you're getting confused. I'm talking about whoever asked me that question about Verizon. We were on this daily chart going into the moving averages here. The goals are very different. We got to make sure we separate these. If you're trading long term, that is why this chart doesn't have any detail on it. You are focused on trend and when to add. This chart has detail because your goals are to make money within a 1 to 5 day period and exit the position. That's it. When you are saying buy with a 15-minute, are you literally just buying a stock for 15 minutes or using the 15 minutes to determine? So Colin, let's go to a 15-minute chart and let's find, oh, now the NASDAQ is down. Let's find a stock to trade from a 15-minute perspective. I bet this is something. All right, let's pull up LABD. All right, so let me zoom in here a bit. Okay, so the most important thing when you're trading on a long-term, 15-minute chart is you want to be, you want this stochastic to be between 80 and 100. So that is this yellow box that I'm drawing right here. As long as this trend line is between 80 and 100, you're fine. Then you're just buying on engulfing candlesticks. So so this thing got into this 80 to 100 area. You could have added right here on this engulfing candlestick. Now, it doesn't mean sell it within a 15-minute period. I'm saying that you are going to be I lost my train of thought. 15, yeah, you don't need to be in and out in 15 minutes. You could just be in and out in that same day. So could have added there. I would not have added on this one. You could have added on this one. And your stochastic is looking great. As soon as this red line drops below, as soon as we get this and start turning down and drop below 80%, get out of this stock, take your profits and run. That could be 5 minutes from now. That could be at 4 o'clock. That could be whatever. Just make sure you're out of it by the end of the day. All right. Let me see here. Mo, if you want to make 3,000 to 4,000 a month, how much will your initial investment be? 3,000 to 4,000 a month. Over 25,000. So moving averages won't count if we are day trading. That's correct, Gianni. Moving averages do not count. How do you set that trend line? There is a PowerPoint in the Patreon announcements of how to set up these charts. Or go to the very beginning of this video and we talked about it. And this will be recorded for you guys. Didn't really matter. Good job on K. What do you think about applying 8-pillar fundamentals to puts and calls? I'm not going to talk about options right now. I thought moving average can show possible resistance. Yeah, they can. Moving averages show resistance. So K is equals fast red and D is yellow. Guy, just go to the setup and look at it. In the Patreon announcements, there's a nice PowerPoint that explains everything. Replicate the chart. If I got stopped out of a trade at -5% and take profits on another at +5, what are the tax implications? I have no idea. Just pay your taxes. So it hits past 80%, totally go out or take profits. You don't have to, oh yeah, if it drops below 80% on a 15-minute chart, exit, totally, get out. Can you talk about bid sizing? I don't really know what you mean by that. The goal of the between 15, yeah, super different. You have totally different goals. For 15-minute chart, you're trying to get in and out on the same day. If you're on the daily chart, that more detailed chart, you are trying to get out in 1 to 5 days. If you're long-term, you're going weeks to months at a time. That's the goal. Now, it doesn't always work that way to stay in weeks or months, but like we stayed in for 14 days, 10 trading sessions on the last one. That's what the chart said to do, so we did it. Not sure if someone asked this, but why is there a difference between your stochastic for the daily and the weekly? And what is the difference between the two? The difference is 2 different goals. One is long-term. One is multiple weeks for a trade. The other one is multiple days for a trade. So that is how that goes. And the chart setup is on there for you. Thank you, Mo. Okay, so do you guys have any more questions? Ask me now or forever hold your peace. I hope that this is useful. I hope this clarified a lot of things for you guys. I was getting multiple questions of the same thing over and over. If Dustin, I really hope this is Dustin Johnson because that would be pretty dope. Dustin, if it was me, I would be using my long-term chart, but I only use my long-term chart. I do not like swing trading. Not my thing. I don't like day trading either. Not my thing. What day was that chart setup document? I don't know. You just have to scroll. It was a couple of months ago. I'm sure somebody will give it to you if you just go in the general chat and ask for it. Does RSI correlate with stochastic? Yeah, it does, but I'm not really sure. Who do you have to win the Masters in Augusta? I hope it's Brooks Koepka because I love Brooks. So do you only do long-term trading? Yep. I used to day trade. I don't enjoy it. Not my thing. I don't like sitting there for hours on end. You can make great money doing it. I was making good money. It's just not very fun for me. I've never swing traded. I don't like it. It's you get stopped out of positions too quickly. So that is that. Any other questions? Brooks just had a knee scoped. Oh, all right. I don't care who wins the Masters then. Tiger's out. Brooks is out. Whatever. How did I find my 5 stocks? I just took time to go through them and just find ones that I liked. Find ones that moved relatively smooth. And I don't run screeners or anything. And frankly, at this point, you guys are my screener. I go in there and I say, hey, can you find me a stock, guys? And you guys find me a stock. It's great. So use each other as a stock screener. I don't know if you answered this question, but if you are trying to make monthly revenue, will you have to do day trading? Yeah, I guess so. Because Yeah, I guess so. I mean, because if you're in it for multiple weeks, it's kind of a crapshoot if you're going to make money that month or not. So, what's your Seth and Paul's net worth? That was a very forward question. Thanks for sharing. Looking forward to continuing. Awesome. And if you guys are not in the Bid and Ask Nation, this is what you get. I will help you with individual stocks. I'll help you with everything. This is what we do on a daily basis. Tweezer pattern on Kellogg. Uh-oh. Maybe change of direction. Thanks for helping. Your Montana guy does what? He trades stocks now. That's all he does. That is all he does. Maybe he ranches cattle too. I don't know. Not the first date, Kevin. I've never even had yeah, never mind. Also, do you do mentorships to be taught privately? No, but if you join the Bid and Ask Nation, I guess that's pretty private. I don't know what you want to be mentored on, but what's the cost for your group? Right now it's $58 and it's going to go up. I think I'm going to send it to 61. So get in now, $58 a month. It's eventually going to get to $100 a month. So, but I still think that $100 a month is pretty good. Do you use balance volume indicator? No, I just let the volume do its thing, and I have an average volume over whatever period I set it to. What trading platform do I use? I use one called, so for my 15-minute, I use Street Smart Edge. And for my other one, I use a website called Phil's Gang. I pay $2,000 a month for it. I mean, $2,000 a year for it. So not sure if you want to do that or not. But how much would you say you can comfortably make with 10,000? Depends what you want to do. If you're day trading, you could probably make upwards of $1,000 a month. Yeah. Thank you, Mo. I'm a new patron. Not sure how to get the maximum out of this membership as is. Need some help. We'll connect with you later. Thanks. Okay, so I should make a point, and it's actually something that I kind of want to do. I kind of want to pick 5 stocks that, and kind of call it the working people's portfolio or something. Those of you that don't have time to be on Discord all day or trade. So I kind of want to pick 5 stocks where, let's say, for example, Verizon would be one of my stocks. I would follow it for you and I would say, all right, guys, we have Verizon has crossed into the sweet spot. What I want, and I would do this every single day. I would update it every single day. I like right here, I would say, guys, let's start a position in Verizon. Okay. And then the next day I would make a video update. Guys, don't do anything in Verizon, leave it. Next day, don't do anything in Verizon, leave it. This would probably, I would have said something in the afternoon. This one, guys, add to Verizon, because it would have looked like that. Next day, do nothing, do nothing. Today, guys, add to Verizon. So maybe I'll do something like that for those of you that can't be here every day, but you will maybe have a basket of 5 stocks. I'll probably make the S&P one. It'll probably be big name stocks. But I'll basically take the work out of it for you guys. And those of you that work, you just have to check my daily update and go from there. So we'll see what to do there. Mo, I think someone asked in the Discord what you look for in stocks. I look for stocks that move consistently a couple times a year through the sweet spot and give me a good run and make me a lot of money. I mean, sounds like a very general answer, but that's really what I look like. I think I fried my brain. Any advice on how to reset it? Go to the gym. Bid and Ask Nation is a level on Patreon. That is correct. Sandro, it is the middle tier. And get on it. Spots are going to fill up. Where will you post the PDF? I will post it in Patreon announcements because this is for everybody. Would you update that on a daily basis? Yes, I would. Now I envy the Bid and Ask Nation. Just join it instead of envy it. When you mean Add to Verizon, like you mean buy more stock. Yes, I love that idea. Yeah, that's what I mean. Buy more stock. How can we join the Bid and Ask Nation? Go to patreon.com/everythingmoney. Here, I'll just pull it up for you guys. Patreon.com/everythingmoney. And join right here. You get access to me. Guys, don't forget, you get all of the software with Everything Money still. Plus, you get to be in my Discord channel. Plus, you get 10% off of EM merch, 15% off Crossroads merch. So, like my homes in Mexico, you guys get access to 15% off of those homes for when you go and rent them. If you choose to go rent them on a vacation. The link is to the left of this video in the details section. Thank you, Nick. Nick knows more about this than I do. I don't know anything about this. I think I'm right. I do need to go to the gym. Yep. Where would that basket be? I would put it in it would be in the Bid and Ask Nation. I'd just make a new channel for it called Working Man's Investor or something like that. What we pay now isn't added to our price for the first tier. I have no idea, Dustin. Whatever you do, it's going to get sorted out. If there is a billing issue, it's going to get sorted out. We don't control what Patreon does. If they overcharge you a little bit, you're going to get your money back. We're not trying to take your money from you. It might take some time because Don has left and he was in charge of all that. But don't fret. If we owe you $17 or $8 or whatever we owe you, you're going to get it. Don't worry. So just be patient if there is some kind of billing issue. What part of Mexico? Manzanillo, Mexico. And the website is luxuryei.com. I don't know why we're still doing this, but luxuryei.com. So this is one of our homes in Mexico. Yep. These are our two homes in Mexico. This is Castillo del Mar. This is Casa de Sofia. We have a home in Dominican Republic, and then we have one in Bali that's coming soon as people can travel again. What are you going to have 8-pillar website for us? I don't understand your question, Kevin. Yeah, we'll credit you the difference. That's no problem. Just be patient with us. We're figuring out. None of us controlled billing, so we have to figure it out. If you guys do have any billing issues at the beginning of next month, do not worry. We're going to give you your money back. We're not trying to steal your money. Let's see. If you already paid some, okay, good. Okay, that's definitely not true, Lily. How far off do you think you're coming? I mean, I would say 12 to 18 months might be a long, yeah, I don't know. We're going to have to see how this thing grows. Would you use the 8 pillars to find a stock to trade it on charts? No, I wouldn't. I don't really care. I would trade Bitcoin on a chart. I don't really care. Yeah, Paul and I, so the way that Paul and I find value stocks, we invest, our portfolios are absolutely identical for our family offices. We don't look at anything like, trading and value are just totally different. When are you buying a new AMG? I just got that one in August, so I'm not going to buy another one for a while. This has been pretty helpful for you guys, I think. Hopefully it clears up some questions. And remember, you can always go back and watch it again. I think that you will benefit greatly from this. I mean, I've been teaching people for 6 to 8 weeks, and there's already people and they're making thousands and thousands of dollars. Yes, I have a meeting in 20 minutes, and somebody called me during it. So, I mean, somebody called me when I was teaching to make sure I'm going to be there. At 14 years old, you started. Yeah, I started. I started trading on paper. It was a game, and my dad saw I did pretty good, so he gave me $500, and then I just kept going from there. And yeah, that's it. When will you start the 5 stocks? I have no idea. Let's see about this Verizon. Oh, yeah, you're right. So Verizon is moving up. It's just moving up. It's not creating. I would like to see it like pull back and make some W formation. So actually on Monday, well, we're going to get it anyway. So you can already see that the stock price is kind of pulling back from those moving averages. So hopefully it does something like this and then goes like that on Monday. Good catch. I know you're new, so very good catch. Do you do risky trading, or is it all done with strict rules? I do 0 risky trading. I am not trying to get rich quick. I do not care about that. I enjoy the process. That's why I'm a value investor. I need to focus on how to exit long so I don't get smoked again like Tesla is. As soon as you drop under 80% or your stochastic rolls over, exit the position. Paper trading. You can use, what's the name of that thing? Interactive Brokers has one. TD Ameritrade has one. Or the way I started, I used some game. I don't know what it was. They gave it to me when I was in like 8th or 9th grade, and that's how I started. But use Excel if you want. Just plug your trades in there and go from there. Is this strategy written in a book? No, it's not. It's all in his head and my head. So maybe we will... maybe I'll write a book. I just hate writing, and I'm not good at it. So, yeah. Oh, Investopedia has paper trading. Great. So there's a lot of free paper trading things out there. Oh, boy. Any other questions? The book will be on the Patreon EM website. Yeah, I mean, if I'm going to write the book, I really like to talk. I don't like writing things down. Like, I would rather have a phone call than do text messages, just because, or I'd rather dictate a text message. I mean, I'm an audio learner, and I like to dictate things. So that's why this platform is so much, it's really easy for me. And that's why I started making videos for the Bid and Ask Nation, because I don't want to type things out. It's just easier for me to talk. I've always loved radio, and that's it. So goals. So do these goals for a day swing and long make sense? Day trade stock between 80 and 100. Buy on big engulfing candlesticks. Moving averages. Bid and ask doesn't matter. Exit once below 80%. You nailed it. 1 to 5 days. Moving averages. Bid and ask matters. Long trend only matters. Yep. Make sure you're over 32%. I will write this book and sell it to you. Ha, I like that. You're welcome, Lily. Should I buy some Verizon stock now? No, we just talked about that. Yeah, it's in the sweet spot. But I want to see, this thing's going to pull back right here. So I want to see this pull back, and maybe on Monday it'll get going like that. So that was, I don't know how to say her name. Hey, tell me how to say your name. Is it Nixie? Nixie? Where is that? Nixie Gypsy. There you go. Swing trade 30. Yep, that's right. Color of your percent K line, red. Percent D, yellow. Right here. K red, D yellow. D's nuts. Nixie Gypsy. Thank you, Mo. You're welcome. All right, guys. Hold on. Let's see. Hold on, my dad texted me, so let me see what he has to say. What to look for first? W, the faces. I'm looking at it. Oh, he wants the order. Okay, so he actually made a pretty good point. So Dad said, when I first look at a stock, what do I look for? So the first thing when I pull up a chart is, I wish he would have texted me this like 30 minutes ago, but first thing I do when I look for a chart is I obviously look at the stochastic, the long-term chart. I want to, anytime I pull up a chart, I'm looking immediately right here. I want to see if the trend is doing something. Then I see if what direction we're moving. I see if there's any pattern. So right now I'm seeing we have a head and shoulders pattern. So, man, I don't know. This one could be, let's see here. What do head and shoulders do with it? So I'm looking right now I'm looking in the past to see what, this is a benefit of knowing your stock. I'm looking out in the past and seeing when they had head and shoulders before, what did the stock price do? They had a head and shoulders here, and we have recovered, and now it's moving up. So we had, let's see, kind of head and shoulders here, and the stock price moves down. So this is actually something that, the nice thing about this head and shoulders, though, we do have a head and shoulders right here, like that, but we have broken out over that area of resistance. So I'm not too concerned anymore. So that's good. So first thing I do, I look for the trend. Second thing I do, just see if we're making engulfing candlesticks moving up. Why does this keep moving? Then I start looking for different things like the head and shoulders patterns, etc. Of course, I go and I look at my bid and ask difference. Make sure it's 1 to 2 cents. For something that is having a hard time breaking through, like this the last couple days, it's having a hard time breaking through until today. Why is it having that hard time breaking through? And then that's when I would go over here and just see what it's doing. And I can see that it was just running into this resistance line. And of course, it had this 100-day and 200-day right above it. So that would be something I would look for. Another thing I would look for is I would love to be over all of my major moving averages. So let's pull up Kellogg, for example. Here's K. Oh, this is Kellogg? Oh yeah, it's going into that 200. Let's do Cardinal Health because I know it's over. So this is why I like Cardinal Health, because it was over all 4 of these major moving averages and it was moving through the sweet spot very nicely. So, and we had great engulfing candlesticks. Man, this thing really took off. That's great. If you guys are still in it, good job. But we do have a little bit of a gap here, so I'm sure this gap will eventually fill on you. So bid and ask difference, stochastics, looking for any patterns, then looking moving averages, this and that. So that is what I look for. That's the order. And if you guys want to know my checklist, make sure you go in the Bid and Ask Nation. It's in the announcements, and it is in there, and it tells you what to do before you buy. It kind of gives you that little checklist. Okay, Nick, just answer your questions. Hi, how can I find you on Discord? I am in the Bid and Ask Nation. Message me and join there and message me in there. Colin, so with Verizon, the reason you can't do that, yes, it's engulfing, but it's running right into that 200 and 100-day moving average. It's going to pull back in price. You need to get over this. You need a green candlestick to break out like that over your 100 and 200-day moving averages here. And yes, the checklist is in the welcome page. All right, guys. Yeah, I got to go, but this has been a good class. I hope you guys enjoyed yourselves, and go back and watch it again. I'll get those things. I'll get the PowerPoints posted over the weekend, and we'll go from there. So you guys have a great weekend. I will talk to you. If you're not in the Bid and Ask Nation, join it. Let's see how many we have left. 18 spots remaining. Somebody just bought one. 17 spots remaining at $58 a month. This thing is going to go up to 61, I think. And it's only going to keep going up from there. So come on in, make some money, and you guys will do very well for yourselves if you just follow the rules. So you guys have a great weekend. I'll talk to you later. Peace.